Good morning once again, and thank you all for joining our webinar this morning. We are getting a few more participants joining, but we will start promptly now. My name is Obert Maposa. I'm with Informal Trust. I'm with the SADC FI team, which is a programmatic wing within Informal Trust. Today, the webinar is on e-commerce solutions appropriate for low-value cross-border trade in the SADC region. This was a study that we commissioned as part of our program in South Africa, the collaborative partnership between Informal Trust, the South African Reserve Bank, and the Swiss State Secretariat for Economic Affairs, also known as SICO. So under this study, we will be going into the details of unpacking the findings around the cross-border trade between South Africa and Zimbabwe, as well as South Africa and Malawi. So the overview is basically to highlight the key areas in terms of opportunities and problems that are associated with the informal cross-border trade and how e-commerce solutions can be developed that are appropriate to improve the profitability, the movement of people and goods across borders, and basically benefiting the broader SADC region by learning from these two corridors. So the prime objective of this webinar is to share learnings and also look for ways in exploring practical solutions to the problems that will be discussed this morning. Today we are joined primarily by four panelists and our keynote speaker. We will be getting a keynote address shortly from Daniel. I'm hoping I'm not going to butcher your surname here. Laucheneur or Laucheneur. Please do correct me when you give your keynote. He is from the SECO, Economic Cooperation and Development, where he heads that in South Africa. My colleague Damola Owalade, who is the head of SADC FI at Informal Trust, will be heading the presentation and giving the key highlights, which will slide into the panel discussion, which expands on the key areas that you would have presented. Therein, we'll be joined by our three panelists, Gertrude Kadumbo, who is from the Malawi switch and is the CEO. We'll also be joined by Lucien Chuti Mbabazi, who's the Managing Director at Better Than Cash Alliance. And lastly, but not least, we'll be joined by Augustine Tawanda, who's the General Secretary at the Zim Cross-Border Trade Association. With this, I would like to welcome Mr. Daniel to give our keynote. Thank you.
Thank you very much, and you did very well with pronouncing my name. Many people struggle with that. Thank you for this opportunity. Ladies and gentlemen, colleagues and partners, thank you really for this opportunity to speak today about a topic that lies really at the heart of regional economic integration and inclusive development, informal cross-border trade, and how digital payments can transform the lives of the people who depend on it. Across Africa, informal cross-border trade is not a marginal activity. In many regions, it represents up to 40% of all intra-African trade. And very important, it is a sector powered predominantly by women and young people. For many families, it is a primary source of income, but it's also a sector that operates on extremely thin margins. Every delay, every fee, every risk directly affects someone's ability to earn a living. Yet informal traders face a series of systematic obstacles that make their work unnecessarily difficult. They make many small repeated payments and often pay disproportionately high transactional cost. Slow and uncertain settlement forces them to rely on cash couriers or middlemen, which is costly and often also unsafe. Complex KYC requirement, inconsistent rules, and non-aligned payment standards create barriers to accessing digital financial services. These constraints not only limit their growth, but also their safety and economic stability. This is why reducing the cost of cross-border transactions through low-cost digital payments is so impactful. Faster, cheaper, and more reliable digital payments keep more money in traders' pockets. They reduce exposure to theft, corruption, and intermediaries. And they make small value, high-frequent trades, those that dominate informal commerce, far more viable, especially for women and youth working with very limited capital. Switzerland, through the State Secretary for Economic Affairs, SECO, has been working in financial inclusion and digital payments in South Africa for nearly a decade now. Our Financial Sector Development and Reform Program, which is implemented in partnership with the World Bank and the relevant governmental institutions in South Africa, laid groundwork for modernizing regulation, promoting inclusion, and strengthening digital financial infrastructure. Building on that, the Inclusive Payment Digitalization Program, which is implemented together with the South African Reserve Bank and Finmark Trust, is supporting greater interoperability, efficiency, and accessibility in the South African payment ecosystem. One of its 5 components focuses specifically on cross-border payment, with the goal of improving access for MSMEs, reducing the cost of low-value cross-border trade, and driving broader regional financial inclusion. This work also links directly to SDG number 9, helping create a more reliable digital infrastructure and enabling the integration of MSMEs in broader regional markets. At the global level, Switzerland's support to the GPFI track, the Global Partnership for Financial Inclusion track during the South African G20 presidency, reinforced the collective ambition to strengthen cross-border payments worldwide. The G20 roadmap to enhance cross-border payments remains a key reference point. Its goal is simple but transformative. Payments that are faster, cheaper, more transparent, and more inclusive, without compromising on security. And this is exactly what informal traders across our region need. But improving payments alone is not enough. Trade facilitation, the simplification and speeding up of custom procedures is equally critical. Informal traders often move small consignment. For them, long queues, unpredictable fees, and petty bribery can immediately wipe out the entire profit margin. Faster and more predictable customs procedures means more stable income, fewer intermediaries, and safer livelihood. They mean that small traders, again, mostly women and youth, can focus on growing their businesses rather than navigating obstacles. To make that happen, 2 things are particularly important. First, across SADC, we must work towards harmonized payment standards and payment governance framework. Today, fragmented rules and technical incompatibilities still block the seamless movement of funds. Aligning these standards is one of the most concrete and effective levers we have to reduce costs and enable instant, interoperable, affordable cross-border payments. Second, our trade frameworks must stay alive, adaptive, and responsive to reality. The AFCFT, the African Continental Free Trade Agreement, the SADC Protocol on Trade, and the AFCFTA Protocol on Women and Youth in Trade gives us an excellent architecture for that. But they must translate into practical reforms at the border. Shortened waiting time, reduced fees, clear rules, and safe passage, not only for goods, but also for the traders themselves. When implementation works at this practical level, we will unlock regional markets in a way that truly includes small traders. Allow me to close by noting a key insight from Finmark's Trust research. When MSMEs shift from cash to formal digital payment platforms, illicit trade declines. Circumvention of export rules is reduced and dangerous cash handlings become less necessary. Digital payments, when inclusive and affordable, are not just a convenience. They are a tool for safer livelihoods, greater transparency, and stronger regional markets. Scaling inclusive payments is therefore one of the most practical, high-impact steps we can take to make cross-border trade easier, safer, and more profitable for the thousands of small traders who depend on it. Many of them are women, many of them are youth, and all of them contribute to the fabric of fabric of Africa's regional economy. Thank you.
Thank you very much, Daniel, for those very key points that you've mentioned in your address. I will now give it over to Mr. Damola Ola, who is a colleague of mine, to take us through the findings of the e-commerce findings and also go into the panel discussion. Over to you, Damola.
Thank you, Robert, and good morning, everybody. I'm going to be talking to the details of the research and complementing that with some of the new insights that we've learned outside of that particular research. As far as the content is concerned, I will give some introduction, get into the value chain details as far as the two corridors that we are speaking on today. And then we will go into some of the opportunities as far as e-commerce is concerned, try to detail some of the regulatory considerations and think through some of the logistical considerations as well. And then we'll conclude. The idea is actually to let the panel discussion be where a lot of these ideas will be thrashed out. So I'm going to try as much as possible to get through the presentation as quickly as I can. Michael. So I wanted to start off with this slide that gives a broad idea in terms of the different dimensions that we need to think about. They're quite important in the sense that it kind of lays the foundation for the aspects that we started out to address as far as our primary and secondary research is concerned, but we might not necessarily have addressed all these aspects, but I think I should start off with that and then I'll go into exactly what we did. So we are trying to drive regional MSME development, and which means that we're looking at low-value cross-border traders, MSMEs. We've thought to think of the profile of these traders within the context of the simplified trade regime type of traders that typically would be allowed to trade up to $2,000 a month per transaction, which is about just less than 40,000 rands. Although in some of our engagements with the SADC Cross-Border Trader Association, we know that on an average, some of the traders are trading up to about 1,000 rand, $1,000, which means that when we are thinking about providing payments infrastructure and all the different types of mechanisms that we're looking to enable more efficient trading at that level, we have some kind of a threshold, a limit that we can look at. So we're thinking around that USD 2,000 mark. I think it's also important to consider proximity as far as cross-border trade is concerned. So you would have traders that are at the commercial hubs of different countries in the region that travel to come into South Africa or maybe into Mozambique as examples. And their incentives and business models will be quite different from the traders that are in border towns. So the border towns that maybe travel straight across the border and go into the neighboring country to get household consumables, maybe at some level business inputs. The kind of needs, the kind of infrastructure for these two different types of traders will be somewhat different. I think it's also important to consider the value chains, so the specific products that some of the MSMEs might be engaged in. So if you think about perishables versus non-perishables, non-perishables might lend themselves to an e-commerce mechanism And that might be different from perishable goods like agriculture produce, where the buyer or the trader actually needs to see the product. And these differences would have important contextual influence on the kind of aspects that we found in the research. And I think it's important to just kind of put that out there. So once we think about the traders themselves, we need to think about how they interface at a client level, at a supplier level, and that happens at a domestic and cross-border basis. And we know that some of these traders, to interface with their clients, sometimes they have WhatsApp or they might use Instagram. Some of them have physical locations where there's face-to-face. Some of them use runners to maybe deliver to their clients. And at a domestic level, particularly in South Africa, we actually have an Uber logistic component within the Uber app, as an instance. That necessarily doesn't align with some of the cross-border issues. From the supplier side, it's pretty much the same dimensions. And these different dimensions have implications around how payments are made, how logistics is thought out, what are the implications for storage, to what extent does e-commerce in a traditional sense become a useful manner in actually engaging within the value chain itself. Another critical issue that I think I need to mention is the data on low value cross-border trade. So we have the FinScope MSME surveys, which the sampling frame actually is based on businesses, and then at some level one can segment MSMEs that are engaged in cross-border trade. And typically, because that survey is looking at MSME broadly speaking, I would go on a limb and say that the MSMEs that are engaged in cross-border trade are probably not well covered, because one can actually have a bespoke cross-border trade or trader survey, which would then change some of the data collection aspects. For instance, one might need to go to a border post to actually recruit MSMEs, as an example, but the FinScope surveys would do the survey at a country level as an example. So that would be one of the sources for getting information on cross-border trade, which could be overlaid on different modules that have to do with the value chains, the kind of profit expectations, revenues, dealing with customers, access to formal financial services, access to business development support, and all the other dimensions that one would require to understand from a demand side perspective the needs for MSMEs. The other aspect that we can think of as far as data is concerned is the balance of payment data that identifies MSMEs and businesses. So this would typically come from the banking data, actually. And personally, I haven't seen this data, and it's something that we probably need to engage with the Financial Surveillance Department more on, and to see if we can mine balance of payment data, particularly merchant payment data, to see the types of businesses, the businesses that are making these transactions, to start to have a frame for potential sampling methodology if we want to kind of understand this market better. Another potential area where we can actually have a better sense of low value cross-border trade, particularly traders that might be unregistered, that are using their personal wallets or personal accounts for trade, would be the balance of payment, the idea that balance of payment codes should be provided to non-banks money transfer operators that we actually understand are driving lots of trade payments between borders in the SADC region. So these would be the Hello Pesas, the Mukus, etc. However, the issue here is that these institutions are remittances service providers. So these cross-border payments for trade purposes are actually masked as remittances. And this essentially then stops us from kind of understanding some of the risks if one wants to delve into customer due diligence, risk assessment, for instance, not really understanding the use case of the payments and thinking that all the payments are for remittance and services would mask that idea. And that third point perhaps is actually one of the recommendations that we should be looking at. So with those three aspects, I'll then move to payments. So when we're thinking about the payments dimension, we need to think about it from the MSME perspective as far as inflow payments and outflow payments. Some of the inflow could be from their customers. The inflow could also be from the traders that might actually act as wholesalers in the context of a long value chain. So you might find that a trader comes to South Africa, buys some input, adds a bit of value to it, and resells it to a retailer in Zimbabwe, as an example. So these dimensions could result in inflow of payments and also outflow of payments when the trader is making payments to address inventory management or to restock. These payments will happen at a domestic level and at a cross-border level. But at a domestic level, for payment to happen, it's required that you have a store of value. And the store of value typically will come from banking institutions. Mobile money operators also offer wallet services. But there are differences between the two in a sense that with the banks, they can offer business accounts, as an example. The mobile money operators of late are also starting to provide merchant wallets as well. So at a domestic level, one could actually mine data, and it's something that we've seen in national switch data. One can see person-to-business transactions within the mobile money ecosystem at a domestic level, and obviously within the banking environment, one can also see merchant payments. However, within the mobile money environment, one doesn't see payment gateway types of mechanisms, in a sense that mobile money is not necessarily integrated with payment gateways that enable e-commerce in a traditional sense. In a domestic sense as well, a lot of the payments gets made by retailers. So you have retailers that are acting as bank agents, or the agent banking modality. ShopRite would be an example, Checkers, and you have the equivalent of these huge retailers outside of South Africa as well that enable cash distribution networks for payments. Some of these payments will be seen as remittances as well, but businesses use them. And then you have your MTOs that also have domestic licenses that drive domestic payments, and obviously the banks and mobile money operators. When it comes to the cross-border dimension, the banks, as I've mentioned, typically are able to drive merchant payments. They're usually licensed to offer cross-border merchant payments. The non-banks typically have licensing requirements that limits the kind of transactions they do to remittances. The trader, on the other hand, could have multiple accounts in multiple countries as well, which is something that one needs to consider, specifically in the CMA, as an example. So one can have a mobile money wallet or a bank account in Eswatini and have a bank account in South Africa, as an example, which actually resolves some of the issues that one might think about as far as the kind of lack of interoperability that one would think when it comes to cross-border payments. As I've mentioned, cross-border merchant payments are only done by banks, as they require a store of value provided by a licensed deposit-taking institution. However, mobile money drives access to store of value outside of South Africa, and there's limited cross-border rail interoperability with licensed cross-border payment service providers. Some of this interoperability happens, and it happens typically when there is a partnership between some of the banks and some of the adlers. So you might find that an adler is in partnership with a bank to then offer a store of value to a trader. You might see that some of the adlers are in partnerships with mobile money operators to terminate payments at the last mile, as an example as well. So you have some kind of fragmentation in terms of the different payment rails. It's also important to mention that in the SADC region specifically, we have the instant payment system, the transaction cleared on an immediate basis, although there's limited adoption at this point. However, getting more participation of banks and non-banks on this platform could also resolve some of the interoperability issue and definitely addressing merchant payments or value chain payments with a middle mile infrastructure in place for this purpose. I think it's also important to mention that in our region, we are also seeing value remittances, particularly in South Africa, where a user or customer can actually order goods, and then the recipient could go to a retailer to get either groceries or farming inputs and things of that nature. So essentially within the license regime of remittances in South Africa, at the least, we're already seeing quasi or pseudo e-commerce platforms, although they're not as pervasive. Just moving on, I think now just dealing with some of the legal and policy considerations, particularly to these payment ideas that I've laid out. When it comes to the finance-related legal and policy considerations, one needs to think about the customer due diligence and KYC, FATF recommendations around knowing who is making payments and the use of those payments to ensure that we avert money laundering or terrorism financing, or avert pilferation or proliferation financing, as an example. And these aspects are also relevant for MSMEs. We find that there's a lack of foundational registries on MSMEs in the region, particularly those that are not registered at the Company of Registrars. Although we do see that FATF is espousing ideas around legal entity identifiers, and the African Union is also looking at an African entity identifier to address some of the gaps around digital identity to enable MSMEs to have credentials that could be verified. We're also looking at the idea that a national ID credential should be sufficient or suffice in the interim before all these lofty ideas around how to address the gaps in digital ID for MSMEs come into pass. So if you are not a registered business, the fact that we can identify you based on the principles of simplified due diligence should be allowed. However, when you're making transactions, some of the non-banks should be able to separate that. Even if you're using your personal accounts, they should be able to separate business transactions from personal transactions, as an example. The other point there is the initial point that I raised around the need for a BOP code for non-banks to separate remittances from a trade. And then the other dimensions around e-commerce and cross-border payments that we think that there are still gaps on are aspects around electronic communications and transactions, legal frameworks, which are still weak in the region. Electronic signature, as an example, which then creates the basis for a binding contract when you're engaged in cross-border electronic payments or electronic commercial activities, as an example. where then litigation processes then avail themselves based on strong legal frameworks. We still have gaps around Consumer Protection Act and Cyber and Data Protection Act and things of that nature that needs to be harmonized as well. I think we should also be thinking about customer consent mechanisms at a domestic and regional level. And maybe just linked to the digital ID aspect, we should be getting to a point where we have regional eKYC frameworks that incorporates the needs of MSMEs into the verification processes that enable access to e-commerce platforms and digital payments platforms. Next slide. So what I've tried to do there with the very first slide is actually to tell you the kind of story, and the next set of slides we just kind of give a bit more visualization to what we're trying to do. And I don't want to maybe take a lot of time. I'm going to stop very soon. But essentially, this slide gives a sense of our research methodology and what we've tried to do to understand some of the barriers and enablers for MSMEs to engage in cross-border trade in those two specific corridors, Malawi, Zimbabwe with South Africa. We needed to understand the e-commerce mechanism, specifically logistics and payments, and to map the value chains. We used key informant interviews, we used desktop research. There wasn't enough budget and resources to do a demand-side primary research, which speaks to some of the aspects that I laid out initially as well. So there will obviously be limitations in terms of the kind of ways we can extrapolate on the findings for this. Next slide. So just to kind of think about the different phases of trade, and some of these will be repetitive in a way, but it kind of gives a sense, a bit more visual perspective on things that I've mentioned. So you have the pre-trading phase, you have the active trading phase, you have the post-trading phase. Some of the aspects that I've already talked about in the pre-trading phase is restocking, interfacing with customers. The opportunities there would be a dedicated e-commerce platform that can enable upfront payments, alleviate financial strain, help MSMEs to find new suppliers and manage inventory. So I think this is quite important to say that you have parallel markets or marketplaces where MSMEs are actually creating their own ecosystems to engage as far as finding digital markets, finding suppliers, finding customers. So these things might happen on a community WhatsApp group, and it does not necessarily have to be a bespoke e-commerce platform, but those are aspects that we can discuss. At the active trading phase, this is actually the point of the MSME actively procuring and sourcing goods. Some of the challenges there are limited access to finance, perhaps credit, some of the cash-based transactions, and the issues around theft, unregulated forex dealers that some of these traders might deal with, especially outside of the CMA. Some of the transportation issues, cumbersome border and customs procedures, inadequate infrastructure for cold storage. You might also find that some of these traders are not meeting the quality standards as far as phytosanitary standards are concerned, and which is actually outside of our core competency as a financial market facilitator, but I think it's something that we should also be putting on the table. And then you have the issues around the movement of the goods. On the post-trading phase, some of the issues there will be quite similar to the pre-trading phase, so you can skip that. Thanks. This slide gives a sense to the level of readiness of e-commerce in the region. As you can see there, we've looked at GSMA data and some primary research on how e-commerce readiness looks. E-commerce in South Africa is quite huge, $6 billion in 2023. Which dwarfs what we're seeing in Malawi and Zimbabwe. The projections are also different. E-commerce readiness index, South Africa is pretty much ahead there. even from an infrastructure perspective, physical infrastructure as an example, if you think about the taxonomy of the details of physical addresses, you might find that in some countries you still need the manner in which you would relate to your physical address to say that I live next to a big river, I live next to a tree. And in the context of e-commerce, that is not really going to work. And then if you think about the affordability aspects as well, you can see that there are disparities. Consumer readiness as far as access to the internet, digital platforms, access to mobile apps, access to mobile phones. There are disparities around there as well. And the key barriers at the bottom of each column. You can go to the next slide. This slide I already mentioned, it kind of just gives a sense of the legal frameworks that I already spoke about. So you can go to the next one as well, so we can get to the panel discussion as quickly as possible. The logistics piece, some of the challenges there, again, the lack of reliable addressing, as I've mentioned, the inadequate internet connectivity at borders, the underdeveloped infrastructure, road, rail networks, the high cost and disincentives for goods in terms of returning goods, especially recourse mechanisms, as an example, if there are issues at a cross-border level becomes somewhat of a challenge. Some of the opportunities there is to look at some of the best practices at a domestic level, the Malaysias, some of the Express Africa brands that one can maybe see potentially that could scale at a regional level. One could also look at financial agent networks as the basis for the networks that can also help with logistics, as an example. Looking at some of the informal types of businesses, getting in partnerships with e-commerce platforms, and looking at deploying digital public infrastructure as far as technological innovations that could also drive the support of logistical needs for cross-border traders. Next slide. I think I will maybe just go to the next slide too. I'm just going to kind of just summarize and end. So as far as enhancing digital capabilities and trust while fostering e-commerce platforms, integration and support, one of the recommendations for us is to build digital capabilities and trust, which means we need to integrate financial literacy in government payments or programs. We need to look at hands-on e-commerce training. We need to look at enhancing last mile delivery, especially in countries that have very weak infrastructure. We need to look at e-commerce platforms and integration and support, supporting SMEs and e-commerce integration, looking at how trader associations can integrate with some of the existing formalized traditional e-commerce platforms. We need to promote mobile first platforms as well. So leveraging some of the existing mechanisms like the Instagrams, the Facebooks, et cetera, to see how that can then be overlaid with some of the more conventional e-commerce modalities that we see. Next slide. We need to improve our regulatory frameworks. How do we get more non-banks to offer merchant payments? How do we change some of the regulations to have non-banks offer wallets so they can also be able to do credit push transactions and be able to actually do demand pool transactions as well, which lends itself to e-commerce mechanisms. We need to see how we can support and make the simplified trade regimes more efficient. We need to also address some of the issues around interoperability of payment systems in the region. And then I will end there. Thank you. So I'm gonna just move along to the panel discussions, and we have our esteemed panelists, Gertrude Kadumo from the National Switch in Malawi, Unshuti Mbabazi from the Better Than Cash Alliance, We have the General Secretary of the Zimbabwe Cross-Border Trader Association, which is actually the SADC cross-border, the Secretariat for the SADC Cross-Border Trade Association. So maybe just to kick off and starting with Augustine, just given the perspective that I've given around the different profiles of traders in the region, the kinds of incentives and the kinds of differences in value chains, the kinds of aspects around proximity to where they might need to get access to wholesalers or maybe to markets, as an example, either within the region or internationally. What do you think, Augustine, as far as some of the issues are in addressing the needs of low adoptions of the more formal payments mechanisms, as far as the kind of proclivity for cash? Would you say these are issues around trust? Would you say these are issues around fragmentation, around the evolution of some of our economic structures? So you have the full formal private sector driven economy, and you have the informal economy that has its own infrastructure, and some of the core demand side issues such as literacy as well. So maybe you can give us some perspective from your role and your proximity to cross-border traders as far as the Zimbabwean Cross-Border Trader Association is concerned. Thank you.
Thank you so much. My apologies. I initially had network connectivity issues, but I'm glad at least we navigated that. But I think I'll start my contribution by going a step back to see the evolution that has taken place within the last 5 or so years. Cross-border trade in the region before COVID was very, very cash concentrated. It was movement of cash most of the time. But when COVID came on board with the lockdowns and, the long periods of lockdowns, that forced cross-border traders to start looking at other ways of doing trade. This is where cross-border traders began moving onto digital platforms, online platforms. You're having things, arrangements like runners, one cross-border trader consolidating or moving, going across the border to try and move consignments of more traders. So the push into digital space for the cross-border trader was really, triggered by COVID. That's what I would want to say in the first place. And right now, as we speak, the dynamic that we have at the moment on the social platforms like your WhatsApp groups, I can safely say cross-border traders are now using that to do a lot of marketing for the goods that they will be, either trading. WhatsApp groups are now playing a significant role in the, execution of business by small-scale traders. But as regards, the traditional systems and platforms, I think the major aspect that we could look at is more of knowledge gap. One, in the first place, you're looking at a constituency which is very much on the side of 70 to 80% women, and they, in terms of literacy level on the digital side, there is a gap that needs to be filled, in the sense that women have less
Augustine, we can't hear you.
Sorry, I've been interrupted. I'm just disconnecting here.
No problem.
Can you hear me now?
Sure, go for it. Please continue.
Right. I was saying the international, the world accepted ways of doing trade on the digital space. I think it's more about information. The traders are not readily, capable of using the system. There's need really to do quite a bit of sensitization, training, conscientization. There's also the issue
Okay, so it seems we've lost Augustine, and I think maybe for the benefit of time, we should bring on the next panelist, and we can circle back to Augustine to finish his thought. So I wanted to go to Gertrude from the National Switch of Malawi. So we were talking about the fragmentation of payment systems, especially at a regional level. At a domestic level.
My apologies.
Sorry, Augustine, I'll just come back to you if you don't mind.
It's okay. Sorry, somebody interrupted me from a landline, so I've just disposed of that. So I was just saying, it's as far as using the main digital platforms, I think the constituents need to be sensitized, trained in terms of how to use, and also gain the confidence, which is, what the constituent has. I think that's what I can initially say in relation to, the slowness of taking up, the use of the digital devices.
Thank you, Augustine. And then I'm going to come back to you so we can flesh out a bit more details there. But I'm going to go to Gertrude now. So Gertrude, obviously in Malawi at a domestic level, there's a national switch. I do understand that not all the payment service providers, be it banks and non-banks, are connected to it. There might still be some bilateral relationships happening. But there is some level of interoperability. And as I've mentioned earlier, even though we know that mobile money drives access to financial inclusion in Malawi, some of the operators already have wallets for persons, have wallets for merchants, and we've even seen outside of Malawi in some countries that some of these mobile money operators have wallets for SACCOs, which is quite interesting. So you already have a domestic ecosystem where we can have access to digital payments for low value trade, but it's a different case when it comes to cross-border. And some of the ideas there would be the potential for the domestic switch to be linked to the regional IPS system. I know that is not there, and that is something that I know is part of some of the conversations that we're having. But before we get to a point where there's a bit more integration between domestic payment systems and regional payment systems, from your perspective, what are your thoughts on how to resolve the issues of merchant payments, ensuring that we have non-banks being able to participate in conventional or traditional e-commerce platforms by being embedded in payment gateways to support the need for cross-border payments for traders specifically? Go for it. Thank you.
Thank you very much, and good morning, everyone. Thank you very much for inviting me to be part of this conversation. as well as for us to share our experiences from the Malawi National Switch. So just to put everything into perspective, Malawi has a national switch that facilitates inclusive as well as interoperable payments. Inclusive in the sense that currently we have all commercial banks integrated to the national switch. We also have got the non-banks, that is all the mobile money operators also integrated to the national switch, as well as the other non-banks, fintechs, microfinancing institutions, savings and credit cooperatives. In addition to this, in order to strengthen the interoperability in the country, we are currently we have just implemented what we call a national e-payment gateway on the national switch. We're calling it a national e-payment gateway basically because we are bringing in government payments, the government pays and social protection programs and so forth, as well as revenue for government, both tax and non-tax revenue on the platform. But in addition to that, we're also enabling e-commerce for the private sector on the national e-payment gateway to facilitate online payments in country. So we do have both account to account, account to wallet, wallet to account, wallet to wallet, as well as the card-based transactions enabled on the national switch, and they're fully interoperable in Malawi. So basically in Malawi, we have all the financial, the payment service payments providers in Malawi integrated to the national switch. So now, how does the national switch in Malawi fit into the discussions that we are having today? So I think for us, the approach that Malawi took, we really basically approached it from the digital public infrastructure perspective, ensuring that we strengthen the financial landscape in Malawi. There were several things that happened from the legal regulatory framework that were enacted in the country. But in addition to that, two systems were also implemented. One of them that focused on the high value transactions, the likes of CSDs, RTGS, ACH. And the second system was the national switch, which is more on the low value transactions. And we believe that our focus, and as well as supporting the regional initiatives that are currently taking place, is that once we complete we go live on the e-commerce platform, the domestic one, as well as bringing government payments into the national switch, what we intend to do is to also integrate the regional payment infrastructures, the likes of TCIB, the COMESA Secretariat, and at a continental level to PABs. And what we are going to be bringing on the platform, one, it's going to be digitization of cross-border remittances and payments. And the second is also to ensure that there is interoperability. When we're talking about that interoperability, we mean that it's going to be inclusive, because in terms of participation, it's not just going to be left to the commercial banks, but also the mobile money operators and the fintechs and so forth. Those that have got accounts or mobile wallets and store of value accounts, they'll be able to facilitate payments, cross-border payments and remittances. And so currently, our focus basically it's on the national switch is basically those regional integrations, and to facilitate, we're going to be a clearing agent for the cross-border transactions, that is the remittances and cross-border payments that facilitate trade for the micro, small and medium enterprises within the region, and especially those coming from Malawi. We do work closely with other DPI, like the National Registration Bureau on the digital IDs, biometrics, and so forth, and other departments of government that are maintaining some digital registries, especially on registration of small businesses and other businesses in the country. Just to make sure that they are also integrated, not only to facilitate payments and whatnot, but to ensure that we are able to we leverage these platforms for the financial institutions that are participants on the national switch, carry out eKYC on their customers and the businesses as well, and also ensure that we operationalize as a financial industry the Data Protection Act and the Consumer Protection regulations in the country, and also we all operate within the Financial Crimes Act in the country. So that is my submission. Thank you very much.
Thank you so much, Gertrude. I'm going to move to Nshuti now. So Nshuti has a much more continental wide perspective, and I think you also would be interacting a lot with policymakers and regulators, and I thought maybe I start off my question to you based on this. So in our region, as I've mentioned earlier, we pretend that a lot of remittances are not passing through non-bank platforms. And I mean, a lot of cross-border payments for trade aren't passing through remittances platforms or other non-bank platforms. And it is a bit strange in a sense that the non-banks are not allowed from a regulatory perspective to actually identify or market merchant payments as a service that they provide within the appropriate risk level. So you can limit the transaction size to $1,000, for instance. So I wanted to maybe use that as the basis for you to maybe give a sense of, from your experience, because I'm sure my understanding is that between Kenya and Tanzania, for instance, some of these merchant payments are actually happening. But outside of that perspective or that example, what do you think are some of the key issues that the regulators are dealing with, or it's stopping them from actually legitimately seeing that non-banks have a huge role to play in the diversification of cross-border payment ecosystems, and also to address one of the key indicators of the G20 roadmap on enhancing cross-border payments, which says that by 2027, all regions must have one payment service for MSMEs. And as we know, that payment kind of exists, but it's within the banking environment and it's exclusionary. So what are your perspective on that?
Thank you for having me, and thank you to FinMark Trust for organizing these important conversations. It was great to hear Seko contextualize the importance of this, and to hear from the cross-border perspective to anchor us. And to answer your question, I really don't understand why the regulators are not allowing for the most popular solutions on this continent that are transforming and accelerating financial inclusion to be a mode of payment, and therefore condemning the largest trading communities at land borders, but even online, to having to depend on cash. The good news, though, is that through the continental free trade, the Africa Continental Free Trade Area protocol on digital trade, and even on women and youth in trade, there is alignment that we need to build inclusive payment systems and ensure that they are responsible enough to leave no one behind. For us to achieve that global standard of regional, systems that bring payments together for MSMEs, it's important that markets such as South Africa, that is the place where many MSMEs from Zimbabwe, from Zambia, from Malawi are buying from, that their MSMEs are the payment gateways that the SMEs are using accept the digital payment solutions in whatever form from Zimbabwe, from Malawi, and all the way up to Cairo. And this is possible. It's just a matter of testing out in a safe environment to address any issues that they perceive, because I believe it's only a perception. And then we quickly address it and we test it out with the cross-border traders today. We get merchants, we get MSMEs in South Africa where they're buying to accept these digital payments and test, and then ensure that the regulation is responsive. The harmonized regulation that has been agreed upon to be established under the Continental Free Trade Area that is legally binding, to test out and see if it, to address any issues that work. Because it's not fair, and I find it an injustice, that we can do business, but then how I transact doesn't work. I mean, I have the luxury of having an account in a continental bank. That account has a mobile wallet and it has an international card, branded card. But then my card works, but my wallet doesn't work here in South Africa. And so only the regulator can make it happen by truly making it happen. And I think that is the responsibility that we have, that if we're going to achieve that target by 2027, this is the time to start. And South Africa's G20 presidency that has been rooted in solidarity, equality, and sustainability, and recognize the importance of digital public infrastructure, such as responsible digital payments, and the need for us to put concerted efforts to unlock finance and markets for MSMEs. This is the time for SADC, and particularly South Africa as the big market that serves many MSMEs, and vice versa from the other markets, for payments to be interoperable. So there is no reason beside perception, I think, and fear, but there is solutions to allay and resolve these fears in practice by learning in solving these issues for traders. And we have a legal basis to do this through what the continent has come together to do. And this region is championing, led by South Africa, to make it happen. So my plea is that there is no reason to fear. Even those traders at Tanzania and Kenya, even though M-Pesa is in, or Airtel are in both countries, still the cross-border traders have to transact in cash, because the merchant payments that are on the same rails as the remittance payments are not allowed to work. And according to the payment service providers, it can just take a mere hours to make this transaction work, because the technology is already there. It's the regulators to allow that to happen. And I think that time has come, and it is now, to make that transaction of person to merchant and business to business, in this case for the traders, to work. So let's test it out to allay the fears and ensure that the right the regulation is informed by reality. And then we move towards achieving what South Africa's G20 presidency has just declared. They want to see 100 million MSMEs being digitally and financially included by 2030. And to get there, we have to solve this issue of interoperable cross-border payments, and we are on hand as partners to make it happen, and we'll be walking this journey until we have the association in SADC fully enabled, which I believe can happen much before 2027.
Thank you, Nshuti. And I'm going to stay with you and then ask the other colleagues questions before we round up. So, I mean, obviously, you've laid out that regulation is really some of the key bottlenecks here. But in my mind, I think there's also a lack of governance, some kind of institutional governance that could drive this forward. At some level in the SADC region, we have the payment system subcommittee within the SADC substructures. And I can tell you that the current strategic focus hasn't currently looked to address this trade issue, although some of the work we're doing with SECO is looking to be the building blocks to then get to a point where perhaps the next iteration of the regional strategy, we can actually have a stronger view on addressing this issue of non-banks playing a bigger role for traders. So do you have any best practices around governance, institutional arrangements that, you know, across the continent and your experience that could potentially help with driving this, maybe in some of the rooms that you also engage in, and what maybe we might not be privy to, what we can anticipate around some of the governance aspects that we should consider that might be imminent. So what are the governance considerations to actually drive this agenda of digitizing cross-border payments, reducing some of the issues around you know, customs control, maybe not that specifically because those are two different domains, although they interrelate with each other, but let's keep this conversation around financial inclusion and payments, and maybe you can throw some digital ID in there as well. Thank you.
So the governance has been established already. The regions are working together from and have been working together. You know, SADC has been at it. Even though the current strategy doesn't have this component, it needs to prioritize it. Please excuse me. Sarah, I need to stop this phone. Maybe I'll just unplug it. But excuse me. Sorry, thank you. The governance systems are in place. SADC is working as it should. The Continental Free Trade Area has been established to link SADC, to strengthen what SADC is already doing in SADC, but to also link it to the rest of the continent through the Africa Continental Free Trade Area Agreement that 54 countries have signed. They've agreed that this agreement needs to come into force by 2030, and therefore this is the time to do the work. We don't have good practices per se to follow within the continent, but we can see regional interoperability of QR codes in ASEAN that is beginning to solve for low value cross-border trade transactions. We can borrow from those, but fundamentally we will have to build this governance and do it ourselves, because we've established the legal framework to get it done. On our part as Better Than Cash Alliance, we are beginning the work to get to these communities, figure out what solutions are in place, work on ensuring that they're interoperating and removing any regulatory barriers that is preventing that interoperability. And it will be the work that you've started that we build upon to really make it happen, right? As far as SADC is concerned. All the payment service providers within the region are working here. So it shouldn't take even a quarter or 6 months to solve this problem. So regardless of what the strategy may say, or what governance may be, may be there or not be there, the traders are here. They've been here. They'll always be here, and that should be our governance. Their pain points and removing those pain points should be what governs what we do. And I really hope that this conversation, and hope is not a strategy, but I trust that this conversation will become action such that we truly get to solve the issues of the traders, and that governs how fast we work versus the industry or the Reserve Bank or the central banks taking their time while the pain points happen. And I hope that there will be African developed platforms that allow, the same way WhatsApp is doing this business, to further give that confidence to the Reserve Banks. There is no reason why this platform that is not owned by this continent is facilitating all these transactions outside of what should happen, but it's a starting point. So let's put the governance in place that is based on solving the needs of the traders now, not later, and then make sure that the regulation is working backwards. Let's solve, then fix the regulation versus fix the regulation and then go solve, to continue putting the traders at risk, denying them affordable access to finance. And the time is now. So we are ready to get it done, and we look forward to working with the switches and the banks and you all and everyone in this to serve the traders the way they deserve and need us to serve them quickly. Thank you.
I'm going to ask Augustine a question about trade policy in the region. And, you know, in some of our countries, we have trade policies around dumping, as an example. To what extent is cross-border trade, low-value cross-border trade or informal cross-border trade flouting some of the, you know, the Ministry of Trade driven policies around dumping or maybe even protectionist, you know, import substitution types of direction? And what is the balance there? Is that something that you've seen in your engagement with the SADC Cross-Border Trader Association, with the ZIM being the secretariat of? Augustine?
Thank you. My response, I think I would start by highlighting that trade policy has been lagging in terms of facilitating small-scale cross-border trade. We made a significant progress with COMESA simplified trade regime. That was the first step of accepting that there is enterprise, there is a legitimate trade. But I would want to also highlight that the origin of simplified trade regime, STR, was more like the coalition of the willing. We have a few countries who really went on, like Malawi, Zambia, who went on to test the system, and COMESA simplified trade regime has been driven and perfected and improved because there were a few countries that were willing to support the agenda of the cross-border trader. I'm posing this in the context that listening to the issue of, you know, our reserve banks, I'm questioning why don't you have something similar, a few countries that are willing to test, so that the one or two who have reservations will find us on board. Meanwhile, we will have resolved the issues of cross-border or limiting cross-border transactions. Now, coming back to, you know, the import substitution, we cross-border trade, we move sometimes lots of goods that are dumped from other countries, and this is a function of economics. You get this product cheaper from Tanzania, which is produced from somewhere, and you go and market it either in Zambia or in Zimbabwe. But there is also a lot of positivity in the sense that when you start looking at locally produced goods, your agricultural goods, and there's now a certain amount of enterprise at SME level, where goods from, say, Zambia or Zimbabwe are now being produced by the SMEs and being moved by the cross-border trade. While there is an element of moving dumped goods, there is definitely, in fact, the scope for promoting intra-trade of regionally produced goods is much higher, because it is actually the cross-border trade, the small-scale cross-border trader who finds the market of honey made in Zimbabwe in Lubumbashi. It is the trader who goes to Malawi with their peanut butter or with their margarine, if I may just give an example. What I'm trying to point out here is, yes, there is a certain amount of dumping, but there's greater potential in growing the regional economies by bringing on board trade legitimately being done. It should not be hidden. Like the transactions that were being described, they are hidden. They do not feature in the GDPs of the country or the region because they are not there. But if we create an environment where these are reflected, you will actually see there will be less of damage than encouragement of intra-trade and productivity. I think that's what I can say.
Before I let you go, I want to just ask one last question. If in your mind or in your experience, if you think about the different value chains, so you have clothes, you have all these plastic belts, all these T-shirts, and all these kinds of things, perfumes, and you might also have farm implements, agriculture kind of implements. You might have household equipment or supplies. You have different value chains. You have people that are also engaged in moving spare parts for cars, for instance. Which of these value chains is the most cash heavy? And which one is the most digitalized by just the natural evolution of these value chains? So one can get a sense of how we could be thinking about our programs as well in terms of where the issue might be the most pronounced.
It will be difficult. Are you there?
Yes, Augustine, you can go ahead.
In terms of identifying, the concentration cash, let me start by giving a broader perspective of the trade dynamic. The experience that I have from the Zimbabwean scenario and also the SADC scenario. Let me share this bit of information. Sitting here in Zimbabwe, going south, business that goes down south, you will find that traders move goods like your curios, your batiks, your doilies, and agricultural produce, of course. That is, if you are looking at Africa South. And if you look at the goods that I'm talking about, they feed into the, what would you call it, the tourism industry of the whole region, Namibia, South Africa, name it. The goods that go to South Africa coming from these countries would be more or less targeting that kind of market. If you are now looking at trade that is going Africa North, you are now looking at goods that are manufactured either locally in Zimbabwe or in South Africa, going into places like your DRC, Zambia. You are now looking at manufactured goods. You are looking at your peanut butter making machines. You are looking at goods that, some of the goods that are produced by even the small scale, small SMEs, if I may put it that way. Your agricultural produce, your agro-processed goods like honey, like cheese, like Africa North, I might put it this way, it's actually taking in goods that are produced either in the farms or in the industry. That is the dynamic that I can separate. But in terms of where is the money, it will be difficult. I'm not very much in the picture. It's an area that I cannot say with confidence. This is the area where there's greater cash concentration. But I just wanted to unpack that there is definitely business that is going within the region. I certainly know that from a Zimbabwe perspective, goods that are produced here in Zimbabwe, like your Cervitas, your milk, they go even as far as Tanzania, Kenya, the DRC. But these are manufactured locally, some of them by the big players, some of them by the small players. But in terms of values and amounts and quantities, this is where we need the policymakers to make it available, that this information becomes readily available. People don't have to, in some cases, try and smuggle certain things just because the regulatory framework is not that supportive. I submit.
Augustine, I think that is probably an area that we also need to maybe intensify our research on, to be able to know some of the value chains that are the cash heaviest, so we can direct our efforts in places where they're most needed. So I'm going to come back to Gertrude now. So Gertrude, you described the payment system and the infrastructure that is being put in place, the middle mile infrastructure that is put in place there, and how that interacts with some of the regional platforms, RTGS, TCIB, etc., which means that there are pathways for licensed FSPs to support cross-border traders. However, I wanted you to maybe get into a bit more detail in the sense that, as we've kind of mentioned and spoken about in this panel this morning, and Shruti is like related to that as well, you'd find that the mobile money operators in Malawi are not licensed money transfer operators, or they don't have the license to do cross-border remittances unless they're in partnerships with a bank. And within that ecosystem itself, they cannot do merchant payments. And knowing that that is the ecosystem that enables access for the majority of people, including MSMEs, how does the great infrastructure and ecosystem that you described then gets calibrated to serve this important market, people that are exporting cashews or tea, etc.?
Thank you very much. So where we're coming from, indeed, the mobile money operators were not participating in merchant payments and whatnot. This was way before the National Payment Systems Act was actually enacted. And once it was enacted, the central bank, the Reserve Bank of Malawi, went back and issued licenses to the mobile money operators, recognizing them that they are payment service providers in the country and they can participate in any area where payments are taking place. So as of now, we do have the mobile money operators also participating in merchant payments in country. Now, as it relates to the regional integrations to promote cross-border remittances and payments, as I pointed out in my earlier submission, my initial submission, where I pointed out that we do have all these payment service providers integrated to the national switch. So what is going to happen is, and we are working in collaboration with the Reserve Bank of Malawi for the purpose of providing oversight and regulation as well, to strengthen regulation in this area, is that when it comes to payments, cross-border remittances, as well as payments, they are going to participate, the mobile money operators, as well as the commercial banks. And then in terms of participation, it's not going to be through a commercial bank. They will participate directly through the national switch and be able for their subscribers to make payments within the region. Thanks a lot.
So thank you. That is music to my ears. So what is the settlement model for that? How do they settle? Because My understanding is that non-banks cannot have access to settlement accounts, especially the RTGS as an example. So how would that work?
Thank you very much. Yes, that is a very critical point that you have raised. In terms of settlement right now, what we're working with is sponsorship by a commercial bank. So settlement for the non-banks that are going to participate in these initiatives will be through the commercial banks. I think you already know the reasons behind that. One is because of credit issues and liquidity issues. And then we also want to address issues to do with settlement risks that are associated with payments for non-banks financial institutions. Thank you.
All right. What I'm going to do now is maybe have each panelist give us one last thought, and then we can close the panel. So since I just had Gertrude on the floor, maybe you can give us your take on how we can move forward here. Obviously, Malawi, there's a lot of things happening in Malawi that we need to anticipate, which could definitely lead to great things. But do you have any last thought on this particular topic this morning?
Yes, I do. Thanks a lot. So probably I think as we're working towards these integrations, what we need to do is not just to focus on the technology. Let's also start looking at regulation and the legal framework on how we can harmonize, since now we're talking about different countries coming together to facilitate cross-border transactions. Yes, at a technical level, it is easier to deliver, but then in terms of the legal and regulatory frameworks and the probably having scheme rules specifically for these schemes that are being put in place. I think those are going to be very critical, also give confidence to the regulators, the likes of the Reserve Bank of South Africa that have got reservations on non-banks transactions being used for cross-border remittances and payments. I think those issues can be addressed through legal and regulatory frameworks, as well as the scheme rules that are going to be defined and implemented for the region. Thank you very much.
Thank you, Gertrude. I'm going to move to Nshuti. Last words.
Last words is let's get it done. I think the call to action is clear from Mr. Augustine. The settlement systems are in place because all these transactions are still happening in financial institutions. And I really would love to see a practical, in fact, I would say I want to hear a different testimony from Mr. Augustine in the next 6 months, because after this conversation, we will have made something happen. Thank you.
Right, Mr. Augustine, last words, sir.
Thank you so much. I like the initiative that is taking place in Malawi, and I'm just saying, why don't we have a coalition of the willing 2-3 countries that start pioneering and, you know, some kind of setup where we can begin to test and showcase the value of the system, just like we did with, you know, commercial simplified trade, because there are countries where traders are benefiting because they are already using the simplified trade regime. I'm just saying, what stops us from having a few countries try the system?
Thank you, Mr. Augustine. And
we are ready. We are ready for those coalition of the willing to make it happen now.
Nshuti, once we get the funding, we can also get in bed and we can do it.
You don't need funding. We just need to get to work. Thank you.
Yeah, we're going to get, someone needs to pay for it. Yeah, we're going to do the best that we can. And I'd like to thank all my panelists. That was really engaging, and I benefited and learned quite a bit. And thank you so much. And I'm going to hand over to Obert to close out the session. Thank you.
Thanks, Damola. And thank you once again to the panelists and to Mr. Daniel from SECO, and to all the participants today. We are hoping that this has been beneficial and to you. And as mentioned, I think the writing is on the wall. let's get to work. We have the institutional willingness across the different members attending today. And indeed, the solution, the proof is in the pudding. We need to make this work. From us here at FMT, we wish you a lovely day further. And thank you again for your attentiveness and participation in today's webinar.
Thank you.
Thank you.
Bye-bye.
Bye-bye.
Thanks, everyone.
Thank
Bye-bye.
you. Bye.